Stock market today, October 20th, 2022. The Nasdaq down 0.61%. S&P 500 down 0.80%. U.S. Treasury 10-year yield up 9.3 basis points. Gold down 0.21%. Bitcoin down 0.66%. Oil up 0.19%. Earnings will continue to go on. We had these notable stocks plus 75% more reporting. And tomorrow we got these plus 12 more. Going into next week, some big names all across here. This will be pretty interesting on Tuesday, Wednesday, Thursday, and looks like the beginning of the week. Looks like by the end of next week we'll have all the big banks and looks like possibly all the big tech companies will have reported. The VIX down just a little bit by 2.54%, which strikes me as very odd because while the volatility, the fear index went down, we're getting ready to go into extreme level of risk per the MMRI risk indicator, right? Closed at 296.1, getting ready to go into that extreme level of risk, which to me, I'm wondering why the VIX didn't shoot up more, because we have some more issues coming to pass. The UK Prime Minister resigned, marking the fastest resignation in the country's history. And perhaps you're aware that they had this big problem with it started with giving tax cuts, and then some pension funds underfunded. I don't know the details. You can find it. I've just been hearing about it and hearing it unfold, and now it's leading to this lady stepping out and some big problems. So it would make sense to me why this is up, but for some reason the market feels calmer with that. When we're looking at the treasuries, we got the 13-year down just a little bit, 5-year up a little bit, 10-year up a little bit, 30-year up a little bit. S&P 500 dropped down today, not able to win the topside battle of this 25-day moving average. Got a lot of selling volume in there. The technology sector, same thing. Not winning the battle to the upside of the 25-day moving average. We got a good just downward slope. Look at this really weak volume over here. But there was more actually, maybe we'll get there. We go. There was more buying volume than there was selling volume, but still look what happened with the price action. In the healthcare front, look at the price action today. So now we're back under this 25-day moving average, which is we're seeing a similar repeating pattern here. Breaking over moving averages, failing. Here trying to rally up. Breaking over moving averages, or up to this one, failing. Breaking above moving averages, failing. Breaking above, failing. Kind of light on the selling volume, but nonetheless, more sellers. Over here on the Pro 2 chart, this is our second day of green. There's enough money flowing in there to trigger it green. So perhaps we'll see it moving up, but green alone, I don't know if green alone, it's enough to switch it from red to green, but right now it still looks like it's whoop, going down. The financial sector also had a down day, closing below this 25-day moving average. And on that Pro 2, here's what I was looking for in the other one. See where this shows yellow here. And in here, when there's not enough money flowing in or out to trigger it to a solid color, then it turns to yellow. I've just been playing with switching it back and forth. Well, we see again, this is losing the battle on that 25-day moving average. And let's look at consumer discretionary falling to the downside with all the body of this candle in the bottom of that trading range and stuck down here, back here. Just more movement to that downside. How about the industrials? Still battling that 25-day moving average. What was the close? All right, closed 2 pennies above the 25-day moving average. I would guess we're going to see it break that tomorrow, would be my guess. So, yeah, looks like some weight to the downside. How about IWM? Same thing, IWM losing the battle with that 25-day moving average and looking very bearish. Qs touch that 25-day moving average today, opening closing in this lower range to the downside. The dollar, we see the dollar testing that 25-day moving average from the other perspective though, right? It's above it and testing it to the downside. Opened here, closed up here, but came down, tested it, pushing up here. The volume's been a little low, but you can see that overall it's not really high volume, but we get these spikes in here, and that wasn't much of a spike. Maybe it's declining, but right now dollar still to the upside. Bonds continuing to move down, which generally, if these bonds are moving down, it's in an inverse correlation for the bond rates, right? The rates go up as these bonds move down. Money's not flowing into these treasuries, so the rate has to go up in order to entice people. And somehow I don't really know the mechanism. This is one that's been eluding me for a while. Like, it's maybe about 2 or 3 years ago, I kept hearing people talking about the yields and all this stuff, and as the yields go up, the stock market moves down. And I thought, I was under the impression that's generally because money is flowing out of stocks and into bonds. I don't really know the mechanism of that exactly. Kind of like I don't really know the mechanism of turning on my light switch or turning on the computer. But hey, if it works, it works, right? So it really does seem to be that as TLT moves down, it seems like the stock market's moving down also. With that one little thing of the VIX the VIX moving down as if it was a positive day, when it wasn't a positive day. We're getting bad news, and the only good news that that I want to share with you right at the moment is that I'm exiting out of that oil trade at a profit. It wasn't necessarily the biggest profit, but you know what? I'm not gonna complain about having a profitable trade. Whew, took that risk off the table. And so that's a weekly chart though. Let's put this on a daily go to 3 months. Staying above that 25-day or that 20-day moving average. Stayed right in here long enough for some theta decay to kick in and finally be able to exit out of that. Oh, thank you. So I'm looking for the next little tasty morsel on trading crude oil. How about GOLD? GOLD, woo, look at that. Damn, to the downside. Broke this little, broke that, this little support line, kind of. Maybe not. Maybe it's in this range. Let's see if it can break 620. Look back at 1 year. Yeah, okay. Here we go. So yeah, if it's going to break below, let's just kind of breaking down into here, maybe we can get some more movement to the downside. Definitely, I would guess like breaking 1600, we'll see some more movement down, which, you know, people get attached to their particular assets that they like. I definitely used to be like this. And you know, people do it with gold. They call those people gold bugs. And then people do it with Bitcoin. Maybe they'll call those people hodlers, something like that. What they call maximalists. I'm not sure. People do that with Tesla. People probably do it with Apple. And so I don't really know what the point of it is. Like, for me, like, if you have an ounce of gold, no matter what the paper price of it is, it's still an ounce of gold. Especially with gold, you have an asset that does not have a simultaneous counterparty risk. Like with a rental property, you have a counterparty risk. You have a tenant, and potentially you could say, you know, got another counterparty risk of government agencies if they're going to allow your tenants to stay there without paying you. That's a new form of risk. But with a stock, you know, you have different type of risks. They have different counterparties in various ways, but you don't have to depend on anybody for this. And let's say for like a share of Tesla, if you really love Tesla and you think it's going to be around for a long time, I'm not sure if Tesla pays a dividend, but what does it matter? What does it matter if the paper price goes up and down? It only would matter if you don't actually, if your attachment is not just to the asset, but also to making money, the value of that asset. So I think it depends on, you know, trying to figure out your investment philosophy and making sure that when you're separating your speculation thinking and your investment thinking, putting those in two separate categories, and maybe gambling, and not kind of intermixing stuff, right? Why are you owning the asset? Are you owning it for capital gains? Are you owning it for, you know, whatever reason? And so I don't know. I don't know why those people do that. I used to, so maybe I should I should know, but I don't. And speaking about the maximalist, we're maximalizing the sideways gain here on Bitcoin and just flirting with this 19,000. And like based on these candles, like it's getting less and less volatile at the moment. I'm excited to see how long it can go sideways. Like maybe it can go sideways for a long time. You know, there are certain assets that really aren't very volatile. They don't really, you know, move too much. And if Bitcoin is basically going to trade in a sideways range for years and years and years to come, then it would behoove myself and maybe you to figure out how we could be selling some iron condors on this puppy. you happen to know, let me know. This is what we're looking at. Prediction for the S&P 500 or the whole market. I'm starting to doubt that it's even going to get up to this top part of the range here. If it's going to get up to this top part of the range without some sort of government program type of thing going on, treasury buying bonds or whatever the case may be, without something to stimulate the stock market, these earnings reports aren't really doing too much. You see what's going on. Okay, we got the tech companies reporting next week. If we don't see this like shooting up to test this, I think maybe it'll move sideways a little bit. It just seems like there's a lot of pressure, right? That's what I'm thinking. There's a lot of pressure to the downside. Something's going on when we got stuff like this going on. We got wars going on. We got all types of stuff, and I would guess sooner or later, money's been flowing out, kind of having this rally. We got more sellers than buyers. It's weak. It's battling this 25-day moving average. Not able to, even if it's going to ride this 25-day moving average, it's riding it down. I guess it could base here, and that's kind of what we're seeing on this line chart right now. You can also put it like this, right? Kind of seeing that, but it's looking weak. So my prediction for today is going to be that I'm not even sure it's going to make it up to here. What kind of prediction is that? I don't know, and I don't care. I don't care. So since I don't care, I think you should care. And you should care enough to paper trade. Paper trade so you can test out some things. Webull has paper trading. Thinkorswim has paper trading. Get something to test out some paper trading. Do that for yourself. And also go to iofsuccess.com. Download some stuff. I'm in the works of making something new. And sooner or later, you'll get that. So, it's a late one over here. 9 p.m. You guys have a fantastic day. Tomorrow's Friday. Let's see how the stock market closes. And then Sunday, I'll be looking at the stock market weekly chart review. And then next week, we'll see how the rest of the earnings are going to play out for the technology companies. We'll have the banks behind us. We'll have the technology companies behind us. And we'll see if how close we're able to get to the top of here. Right now, it's not looking too close. Have a good night. Bye-bye.